Hello everyone. Welcome to past paper revision sessions for Advanced Taxation exam. I'm your tutor Owais Mirchawala, and in these past paper revision sessions, I will be discussing 5 complete attempts exam papers of Advanced Taxation. See, one of the major reason of students' failure in their advanced taxation exam is that students do not practice complete attempt exam papers before going for their actual examination. And as a result, they are not trained to deal with all of the topics of taxation together. See, as you all know, that advanced taxation is one of the biggest course in ACCA qualification. So it is very important that a student remember all of the rules of taxation when he's going for his exam. Students do practice the past paper, but that practice is topical practice only. Like for example, a student studies a topic of capital gain tax or inheritance tax, then he goes to the exam kit and he attempts the topical past paper questions only. See, attempting topical questions is comparatively easier because you've studied a particular topic and then you are attempting a question relating to it only. But when you go for your actual examination, it's not just one topic. You have to deal with a complete exam paper in which all of the areas of taxation are being examined together. Like you have to be good at income tax, capital gain tax, inheritance taxes, value added taxes, corporation taxes, all of the areas together. And most importantly, you should remember all of the rules together and you should have an ability to deal with all of those topics at the same point of time. So when you'll be doing these past paper revision sessions, you will get a very good insight that what is your real preparation level. Like when you have to deal with all of the topics together, are you able to recall the rules or not? So in my advanced taxation course package, these past paper revision sessions hold a lot of importance. First, I teach all of the topics to the students with the practice questions, topical past paper questions, but then I put a lot of emphasis on these past paper revision sessions. So, our approach in these past paper revision sessions will be that first I will be discussing 5 complete attempt papers with you people in these recorded sessions. I will be drafting actual answers in these sessions. So these will be long classes. We'll be drafting complete answers. We'll be discussing complete answers that how you have to draft it. We'll be looking at professional skill marks also. We'll be looking at how you have to use this CV practice platform. So everything will be discussed in these sessions. So these will be long classes in which we'll be discussing 5 complete attempt papers. Once done with that, I recommend the students to watch these 5 complete papers with me only. Don't attempt it on your own. First, watch these 5 papers with me. Once done with that, then I will give you 3 exam papers as a mock exam to attempt on your own and send me for marking and feedback. So it is very important that you prepare yourself in the same manner. You make sure that you watch these sessions, understand the professional skill marks, understand the ability that how you have to deal with all of the topics together, understand that how you have to use the CB practice platform. And most importantly, when you will be watching these sessions, you will be getting a very good revision of your course topics also. Now, in order to do the revision, what you can do is that obviously you have your own class notes and the topical notes which you have studied. But my famous summary notes are also available if you want to use them. If I open that file, that's also available to my students, and those students who are not studying from me, they can ask from me also. I'll share it with them that these summary notes are a very good lifesaver document. Through these summary notes, you can have a very good preparation while studying your course. Like it can help you in revising different topics. For example, if you want to simply go and revise any topic, for example, in a past paper question, a question comes on corporation tax, and for example, it's about research and development. So you just press Control F, find, and you simply go and write research and development. And here you come on the research and development. Or, for example, if you are dealing with a topic and you need to revise a topic relating to property income, you just write property income, and here you go, you get the topic of the property income. So, in these summary notes, I have summarized the entire course of advanced taxation in just 56 pages. So, that gives a very good revision to the students while they are doing the past exam papers. So the entire course is summarized in these 56 pages. You can revise any topic while you are watching the lecture, while you are doing the past paper revision sessions. Like when we'll be doing this complete exam paper, there will be situations when you have to revise IHT, you have to revise capital gain tax. You just go here, if, for example, if you have to revise the rule relating to destruction of asset, you simply go, you write destruction of asset, and you get the complete rule. So that will give you a very good revision. So these summary notes are a very useful document. So I always say that it's a lifesaver document for the students who are just going for their examination. You obviously have your course notes, the class notes which I prepared, which are detailed one, in which we have done the practice questions and the past papers also. But these summary notes will give you a very good insight for the revision. So now we are starting with the first exam paper question. It's a December 2023 exam paper. See, many students ask me that, sir, whether we should be doing the exam kit or not. See, exam kit also includes the past papers. Doing the exam kit is good for topical past paper practice. And during the course, as we are studying the topics, we have already done the topical past papers. Obviously, same questions are in the exam kit. Exam kit do not develop its own questions. Now, when you're in the last month of your preparation, it is very important that you watch complete papers rather than doing topical practice. Okay, so rather than going for topical past paper practice, I recommend that you should be doing past paper revision sessions at this point of time. Like doing complete papers will be more useful for you and more beneficial for you at this point of time. Okay, so let's start with this first past paper question, which is a December 2023 paper. Okay, it is updated as per 23-24 syllabus. Now, one confusion, so that 23-24 syllabus, for which exam attempts it's relevant? It's relevant from June 2024 exam to March 2025 exam. Now the student will say, sir, I'm studying in 2024. Why we are studying the text of 2023-24? Always remember that tax works 1 year behind. Tax do not works in advance or in current year. You first earn in a complete year, then you file a return. So for the students who will be giving exam in June 24 to March 25, this Finance Act is relevant, which we call as Finance Act 2023, 23-24 examination. Okay, so let's start with this first past paper question, which is a December 2023 paper. We'll be attempting the first question. Our approach will be, first I'll read the complete question, just like you have to do in your examination. Then we'll discuss the answer points. Once we have discussed the answer points, then we'll graph the complete answer during the class. See, it's very easy for me, like other tutors. Like I just discuss the answer and I read the examiner answer with you people. But that will never give you an understanding that how you have to actually draft the answer. Okay. So if you need to understand that how you have to actually draft the answer, you need to watch me while I'm drafting the answer. You need to watch me very carefully that how I develop the point, how I pick the issues. So that will give you the best understanding when we'll be drafting the answers. Okay. So your patience and concentration will be very important. Yes, these will be long classes. These will be detailed sessions. But this is the best possible effort I'm doing for my students. I've taught you all the topics. We have studied all the concepts. I've given you summary notes for your revision. Now we are doing complete past papers again. See, this is the second time we are doing past papers. We have already done these questions when we are doing topical practice. Now we are doing these past papers again so that you get an idea that how you have to deal with a complete paper. Once you watch 5 complete papers with me, then you have to do 3 mock exams on your own, and then you have to send for marking and feedback. Okay, so let's start with this first question, which is a question of December 2023 attempt. Okay, let's start with it. You should assume that today's date is 1st January 2024. You are an ACCA student working for a firm of accountants. Your manager has asked you to prepare a memorandum concerning the personal tax affairs of Jake, a new client of your firm. In addition to some ethical considerations which have been raised by your manager, advice is required in respect of. See, we are currently doing first time reading of the question. When you are reading the question for the first time, obviously you don't develop your answer at that point of time. You are just identifying the issues, you are just picking up the points which you will be using while you will be drafting the answer. Now, many students ask some questions. Let me address those also since we are doing complete past papers. So, whether we should read the requirement first or we should read the scenario first, I recommend to read the scenario first because when you read the scenario, you are able to relate the issues when you read the requirement. Otherwise, you will be rushing and that will create frustration for you. So, first read the scenario with patience. And when you are doing first time reading, don't make any judgments that it's difficult or easy. Every question is easy. The important thing is that how you approach it, how relaxed your mindset is. You have to approach the paper with a relaxed mindset. You have to be good at rules. You are provided with the summary notes for revising the rules regularly. In the examination, obviously, it will not be available. So you have to revise the rules on your own, remember the things. But when you are doing practice, you have the summary notes to refer. So be relaxed, approach the paper in an easy manner. Just read the question first time when you're reading it. Try and identify and relate maximum possible things as much as you can. But it's obviously not answering the question currently. When we'll be actually drafting it, we'll look at it detail. Second thing is, so whether we should start with question number one or question two, three. See, the first answer is it's completely your choice that whatever you want to do, it's completely acceptable. Like you have to do whole paper. So if you want to start with question two, three, that's also acceptable. But I recommend that it's not about starting from question one, two, or three. It's about attempting the easy requirements first. Okay. Now, what do I mean by this? You have to make sure that you walk through the entire paper, that you attempt the entire paper. And while attempting that entire paper, you first attempt the easy requirements first. Like, for example, question number one is of 50 marks. So, when you are attempting it, maybe in this question number one, 30 marks are easy and 20 are a bit difficult. Maybe difficult for one student, but not for another. So if those are difficult requirement for you, what you have to do is that you have to attempt 30 marks only, leave the 20 marks requirements. Move to question number two. Attempt like 15, 20 marks, which are easy for you, then move to question number three. Attempt the easy requirements first. Once you are done with that, then go for difficult ones. See, it's not about that you will attempt good 100 marks, then only you will pass. It's not like that. You have to make sure that you have walked through the entire 100 marks. You have read all 100 marks. You have picked up the easy ones and you attempted those 70 or 65 or 75 easy marks in the best manner. And that leads to your passing of the exam. Don't spend time on difficult ones. See, it's completely logical that we should spend more time on easy requirements. But what a student do is that they spend more time on difficult requirements. Like for example, they start question number one and I would say that they fight with the examiner that no, I have to attempt all ones. No, it's not like that. Attempt the easy ones, leave the difficult ones, move to question two, question three, and in the end, when you get time, come back and try to gain maximum in those difficult ones. But the easy ones will lead to passing of your examination. Okay, so start with question number one, be relaxed, go with the easy ones, and always remember that in your examination there will be at least 65 to 70 easy mark requirements, and that results in passing of your examination. Don't waste your time in difficult requirements. Okay, one more issue. So, what about the ethics question? See, in our advanced taxation exam, 5 marks are relating to ethics topic. I have uploaded a handout for my students on the learning management system in which I have summarized all of the requirements relating to ethics. I haven't provided you a separate lecture on it because it's not required. I've provided you a complete document on all the possible answers of ethics. And when we'll be attempting these past paper revision sessions, like these sessions, we'll be discussing those ethics requirements. So those are very easy. 5 easy marks, those are cash mark. You just read my document. Okay. If you have any query, you can always ask me. Okay. If required, if anyone will want, I provide extra help also in that, but that's not required. You just read the document, you just watch these past paper revision sessions, and the ethics related requirements will get sorted. Okay, it's very easy 5 marks requirement. And these are standard requirements, like every time a same kind of requirement is coming. Okay, like 2 3 requirements, topics, examiner selected that what we should be doing, that if client is doing something wrong activity, if he has got some unexpected refund, if he's understating the income, what are the actions? Okay, what are the actions we should be taking while accepting the client? So it's just a list of certain requirements which the examiner always asks when we'll be doing these past paper revision sessions of 5 complete attempts. Okay, it will get very much easier. For the professional skill marks, when we'll be answering it, you'll get an understanding that how you have to apply the professional skill marks. And you all know that I've already provided you a lecture, a complete lecture to my students on professional skill marks also. and about dealing with this practice platform, that where we have to use word processor, where we have to use spreadsheet, everything will be sorted when we'll be attempting the answer in actual. Okay, so coming back to the question again, the capital gain tax implications of the replacement of a destroyed building, the relief available for revenue and capital expenditure incurred by an unincorporated creditor, the value added tax capital goods scheme, and the inheritance tax and capital gain tax implications of a sale of shares which were originally acquired by way of gift. So it's just an introduction of the question, list of the expectation of the examiner. Obviously, the detail is written on the left hand side. The following exhibits available on the left hand side of the screen provide information relevant to the question. Jake's new unincorporated business, letter from Jake. Exhibit 2 is sale of shares in Paul Limited, schedule from Jake, and work to be carried out, which is an email from our manager. The information should be used to answer the question requirements within your chosen response options. There are two response options. One is a word processor in which you type the things, and other is a spreadsheet which is used for calculation purpose. So where do you recommend to answer it? While I'll be answering it, you'll get a complete guidance. But as an overview, I recommend to answer the complete question in word processor only. And wherever you have to do calculation, I recommend to use the table rather than the spreadsheet. It's my personal opinion that solving the complete answer on single screen is much better rather than shifting it to spreadsheet again and again. But if someone want, they can use a spreadsheet for calculation purpose. But I'll be giving you complete guide that how I recommend and what are the options which you have. It's completely choice of the student that you want to use a spreadsheet or not. That's not mandatory. Okay, like I recommend that we'll be typing the entire answer. If we have to do any calculation anywhere, we'll just add a table, we'll use our calculator, and we'll develop the answer on a single screen. Okay, but when we'll be drafting the answer, obviously you'll get a better understanding that how you have to deal with these response options. Let's look at this first exhibit, and that's Jake's new unincorporated business. Okay, see, first time reading of the question is very important, that you read the question with patience and you don't have to rush at that point of time, because if you'll rush, you will try to pick up a lot of data, then you'll get confused. Just read it with patience and everything will be sorted. As I told you, every question is easy. It's just about how you approach it. So extract from a letter from Jake dated 1st January 2024. New unincorporated business. I will begin trading on 1st May 2024. I will also register for the purpose of value added tax from that date. I will prepare accounts to 30th April each year. Construction of business premises. As you know, I own the Wall building, a commercial building that I rented out to business tenant for many years until it was destroyed in fire on 1st August 2023. I understand from our discussion that the insurance proceeds of £380,000 resulted in chargeable gain of £130,000. This will be my only chargeable gain in the tax year 23-24. So apparently he's referring about capital gain tax, destruction of asset rules, that his wall building got destroyed. He got a proceed of 380,000, and on that proceed he got a chargeable gain of £130,000. I have now decided to use some of the proceeds to have a new building, the Yak building, constructed on the site where the Royal building was situated. So when you reinvest the proceeds, your gain can get deferred. The construction of the Yak building will cost £335,000 plus 20% VAT. The cost of £335,000 includes £75,000 in respect of electrical systems, heating systems, and integral features. Now, as per my knowledge, what I can relate here, obviously, my detailed knowledge is much greater. My remembering of rules is better than you guys, but still, you also have to develop this ability. When he's referring these electrical systems, heating systems, other integral features, my mind is going towards capital allowances, special rate pool implications. Okay, that okay, there is capital allowances issue, and since it's a building issue, and he's telling that okay, these much things relate to heating and lighting system, so what he's referring particularly is that structure building allowance will be available on the entire building except this £75,000 on which the capital allowance implications will be arising. Now, obviously, if someone thinks that, sir, I've forgotten these rules, just go to your summary notes and think about structure building allowance, SBA. So you can reach this structure building allowance concept. Okay, then as he said that there are heating system, electrical systems, so just go and write, and you will find the rule relating to heating systems, that heating and cooling systems in capital allowances, you refer the rules of special rate pool. So see, as I told you that you studied a topic, you did a past paper at that time, it was very easy because capital allowances were in your mind that, okay, I have to refer it. But in the actual exam, in the first para, you have to think about capital gain tax. In the second para, you have to think about structure building allowance. You have to think about capital allowances. And here in the examination, the students get, boom, he forget everything. Everything get mixed. This is the point where I say that these complete past paper revision sessions are very critical. Like, this is the most important thing in taxation, that you have to attempt these complete papers before going for the actual examination. Like when you are watching these sessions, sometimes the student feels that, oh, I want to go and revise the whole course again. Okay, so these revision sessions hold a lot of importance. I plan to use whole of the building for the purpose of carrying on my unincorporated business from 1st May 2024. Okay, expenditure to be incurred in relation to the new business. I will incur following expenditures in relation to new business. On 1st February 2024, I will complete the purchase of the newly constructed building, YAG building. Any post-tax insurance proceed remaining after the construction of the YAG building will be invested in my new business as follows. Between now and 30th April 24. See, the new business will start on 1st May 24. Currently, we are standing at 1st January. So he's saying between now and 30th April, which means before the start of the business. See, just think about it. Now is 1st January 24 when Jake wrote you the letter. The business is starting on 1st May. So between now and 30th April 24, so it's about pre-trading expenditures. I will travel extensively throughout the UK in order to visit potential customers and persuade them to place advance orders for my product. So, sir, what about pre-trading expenses? So, pre-trading expenses are allowed expenses if those expenses are incurred within 7 years before start of the business. So, it's within the 7 years. It's like just 3 months. Now is 1st January 24 and 30th April 24. Now do not means the today's date. Now means the date in the question. So within 3 months, if any expenditures are incurred, obviously those are allowed expenses because pre-trading expenses up till 7 years are permitted. Okay, but you have to note that these should be business expenses only. And if you spend anything on the customer's entertainment, so that's not an allowed expense because tax department do not like the customer entertainment expenses. However, if it's overseas customers, then that would be permitted. Because obviously tax department says that entertainment expenses on customers create unfair competition practices. Okay, so when we'll be drafting the answer, it will get clear. It's an easy one. On 1st May 24, I'll purchase a new car which I'll use 65% for business and 35% for private purpose. This will not be a car with zero CO2 emission. So if it's not a zero CO2 emission car, so either it's a main pool car or it's a special rate pool car. Okay, if it's below 50 grams, it's main pool. If it's above 50 grams, then it will go for special rate pool. Now again, remembering the rules, that's very important. When we'll be writing the answer, you'll obviously get more better idea. Alternative plan for the use of yak building. I'm considering for an alternative plan for the use of yak building as follows. For a period of 4 years from 1st May 24, I would use 70% of the yak building for the purpose of carrying on my unincorporated business, and I would rent out the remainder of the building from that date. By the end of 4 year period, my business should have grown sufficiently to require the use of whole building. So another option is that for 4 years, we rent out 30% of the building and use 70% in our business. And after 4 years, when our business is expanded sufficiently, then we'll bring the entire building in our own use. Now, we exactly do not know that what you want to ask from this paragraph. So we'll just wait. Okay, there is no need to rush. Sale of shares in Paul Limited. I'm also considering selling the whole of my shareholding in Paul Limited, consisting of 6,000 ordinary shares. I enclose a schedule setting out additional information in respect of these shares in Exhibit 2. Okay, we'll look at it. So now let's look at the Exhibit 2, that what he's saying there. Now, schedule from Jake dated 1st January 2024. Details of the possible sale of all of my shares in Paul Limited. This sale would not take place until the tax year 24-25. I would sell the shares for their market value, which I would expect to be 470,000 pounds. Okay. Paul Limited is an unquoted manufacturing company. I have never been an employee in Paul Limited and will not become one in the future. See, when we are disposing the shares, individual selling of the shares, and if we are not an employee, it apparently gives a hint of the topic of business asset disposal relief. That bidder will not be available because we are not an employee of the company. If you remember the rules of the bidder. Individual selling the shares, your mind should go for bidder. Company selling the shares, your mind should go for substantial shareholding exemption. Individual selling the share, your mind should go for bidder. For bidder, it's necessary that you should be an employee of the company. So apparently, bidder will not be available. Acquisition of shares from my aunt. 1st May 2015, my aunt purchased 6,000 ordinary shares in Paul Limited for 295,000 pounds. 1st October 21, my aunt gave all of her shares to me. At that time, the shares had a market value of 420,000. My aunt and I made a joint election for the purpose of gift holdover relief. This resulted in 112,500 of the gain being held over. So base cost computation will be done. For the purpose of inheritance tax, I was advised, and you have subsequently confirmed, that this qualified for 100% rate of business property relief at that time because my aunt had owned the shares for more than 2 years. And 12% of the value of Paul Limited asset consisted of accepted assets. So BPR percentage is 100%. But on 12%, the BPR will not be available because these were the accepted assets. So BPR would be claimed on 88% portion only. Okay. In the tax year 21-22, my aunt also made a gift of an investment property to my sister. This occurred on 1st September 2021 when the market value of the property was 360,000. So this means that our gift is also in 21-22, 1st October 21, and in 21-22, and which happened just 1 month before us. There was another gift of 360,000, which means annual exemption and nil rate band, everything would be used against that gift of 360,000. So apparently, when examiner refers such a big gift, such just before our gift, which he's referring, so this means that annual exemption and nil rate band will be used. Okay. Obviously, we'll look at it detail when we'll be drafting the answer. So for now, it's just the patience which is more important. Work to be carried out. To tax senior from tax manager, subject Jake, date 1st January 2024. Please prepare a memorandum for the client file which addresses the following issue. Part A, becoming tax advisors to Jake. I have not identified any threats to compliance with the fundamental principles of professional ethics which would arise as a result of becoming tax advisor to Jake. Explain why is it important that we contact the Jake's previous tax advisor. See, this is a very simple requirement that why we contact the previous tax advisor. We always contact the previous professional like a previous auditor, previous tax advisor when we are becoming a new service provider. It's the requirement of professional ethics. Why it's a requirement of professional ethics? We ask them that whether there is any ethical issue that they want to bring it to our attention, like they may tell that, okay, this client lacks integrity, anything they want to tell us, we always ask the previous tax advisor. And we also ask them what was the reason that they didn't continue the engagement, like whether the client didn't pay their fees or whether there was any other issue. So it's always important to contact the previous professional. The two primary reason of doing is to know the reason of their leaving, like why they left it. Maybe they just don't want to do the engagement, or if there is any issue, they tell us. Or is there any ethical issue which they want to bring to our attention? And it is so important to contact the previous service provider that if the client do not allow us to contact them, like if the client say that no, I do not allow you to contact them, then we may not accept the engagement. So we contact the previous professionals due to two reasons. There are two primary reasons. The reason number one is that we want to know the reason of their leaving. And number two is that is there any ethical issue which they want to tell us? And if the client do not permit us to contact the previous advisor, obviously we do it with the client permission. So if the client do not permit us, then we may not accept the engagement. It's a very important thing. and state any other actions we should take before we agree to become Jake tax advisor. So always remember that before becoming tax advisor of anyone, we know about their source of income. We take documents relating to their source of identity. We take documents relating to their business activity, that from where they are earning, so as to get a surety that they are not involved in any money laundering or any illegal things. So we need to have documents relating to Jake's identity, his nationality, his residency, to determine that okay, he's a legitimate guy. Because if you'd be providing service to any illegal person or any some wrong person, we'll also get liable. So it's a 5 marks requirement relating to ethics, and it will always come in your examination. So when we'll be drafting these 5 complete attempt papers, you'll get a complete idea that how you have to deal with ethics. And plus, my life-saving documents. That life-saving document on ethics is the best one. You just read it, all of the requirements are just done. Nothing to worry about. So there's the 5 marks requirement. We'll be attempting it in detail when we'll be drafting the answer. Part B, new unincorporated business. When carrying out task 1 and 2, you should ignore the alternative plan for the use of yak building and simply assume that whole of the yak building will be used for the purpose of carrying on Jack's unincorporated business. You should ignore the VAT. Part 1, insurance proceed available for the investment in business. Now here we have to ignore the alternative use in which we were planning to rent it out, and plus we have to ignore the VAT implications also. On the assumption that the construction of yak building will be completed and paid for on 1st February 2024, explain the relief available to Jack in relation to the chargeable gain resulting from the destruction of the wall building. So see, if the construction of yak building is completed, so what relief is available to Jake in relation to the gain? You are reinvesting the proceeds. See, if you remember the proceeds of wall building which resulted in a gain, if you remember the exhibit number 1, we got insurance proceeds of 380,000 which resulted in a chargeable gain. So if we reinvest the proceeds, we are reinvesting 335,000 pounds. He has stated to ignore the VAT implications. So we are reinvesting 335,000. So since it's partial reinvestment, but our gain will still get deferred. We have a gain of 130,000. Lower of gain and cash in hand will become chargeable now. We got 380,000, we are reinvesting 335. We have cash in hand of 45,000. Now lower of your gain and cash in hand gets chargeable now, and the rest gets deferred. Now 130,000 is your gain, cash in hand is 45,000. So lower off will be chargeable now and rest will be deferred. So 130 minus 45, 85,000 of the gain will get deferred. Sir, I've forgotten the rules. Just go to summary notes, write destruction of asset. Here you go. If the full proceeds are reinvested, then whole gain will be deferred. If partial reinvestment, then lower off will be chargeable now and rest will be deferred. Gain and cash in hand. You have to reinvest the proceeds within 12 months. I believe that. It's just about remembering the rules. You got 380, you are reinvesting 335, 45,000 is the cash in hand. Your gain is 130, lower off gets chargeable now, rest gets deferred. So 130 and 45, obviously 45 is lower off. So that will be chargeable now and 85,000 of the gain will get deferred. Again, I'll say that when we'll be drafting it, it will get very clear. On the assumption that Jake's claim, the relief you have identified in part 1, and will have a total income in the tax year 23-24 of 30,000 pounds. Calculate the amount of post-tax insurance proceeds which will be available after the construction of yak building for the investment in new business. 8 marks. Believe me, calculating post-tax proceeds on this gain of 85,000, it's just very basic. And these 8 marks, I'll just pick and eat it. It's so easy. It's so easy. Destruction of asset, reinvestment situation, calculating post-tax proceed. Believe me, it's very easy. When I'll be solving it, you'll love it. Sir, it's so easy. But remembering the rules is important. You need to remember the rules of destruction of asset and everything. If you don't remember the rules, then I'm sorry. If you don't remember the rules, how can I help you? So remembering the rules is very important. You've studied the whole course, you know the topics. By now you have obviously completed the whole course. Now use the summary notes, read it whole day. Make sure you remember all the rules. Okay. So we'll be looking at in detail when we'll be drafting the answer. Part 2, tax deduction in respect of the expenditure to be incurred. Explain when, if at all, Jake will be able to claim the deduction for the cost he is likely to be incurred in respect of visiting the potential customers. So it's a pre-trading expenditure. Yes, he can claim the allowed expense in the first year of trade. Okay, pre-trading expenses in 7 years prior to start of business, you treat it as expenditures incurred on the first day of the business. You can claim an allowed expense, but that should be completely trading outflows, not your vacations. Okay, and visiting the customers is acceptable, but if you give any gifts or entertainment to the customer, then that will not be an allowed expense. Explain the tax deductions which will be available in Jake's first trading period in respect of the construction of the yacht building, yes, capital allowances and structure building allowance, and the purchase of the car, on which also capital allowance implications will be relevant. 8 marks requirements. Believe me, it's an easy one. Easy one. Pre-trading expenses, construction of yacht building. Think about this. 75,000 goes in capital allowance and rest of the value goes in structure building allowance. Okay. For the car, it's not a zero CO2 emission car. So it's not 100% allowance. You have to think about main pool and special rate pool. And then alternative plan for the use of yacht building. When carrying out this task 3, you should assume that the alternative plan for the use of yacht building is followed. I can confirm that supplies to be made by Jake's unincorporated business will be wholly standard rated for the purpose of that. However, due to application of capital goods scheme, Jake's ability to recover full £67,000 of input tax over the life of the building will be restricted unless he opts to tax the building. Why? Because see, in alternative plan, you need to remember that he will rent out 30%. He would only use 70% and he will rent out 30%. Renting out is an exempt use of the building. You already have studied the land and building rules. Renting out is an exempt use. When you rent it out, it becomes exempt use. Now, unless he opts to tax, when you go for opt to tax, it's treated as a taxable use. Calculate the maximum amount of additional input tax which Jake could recover if he wants to elect to opt to tax the yacht building on 1st May 2024. Your calculation should indicate the years in which the input tax would be recovered. See, now what you need to understand is that in first 4 years, that's the issue of first 4 years, if you remember, that he will be doing this issue in the first 4 years. So in the first 4 years, when 30% will be rented out, so that 30% is an exempt use. So he'll not be able to recover the VAT relating to it. Now again, if someone has forgotten it, just write land and building rules in the value added taxes on just a second, because land and building is referred in many other topics. Here it comes, commercial land and building rules. Okay, and then recovery of VAT depends on what purpose for land and building is being used. If land and building is used for production of goods and services which are taxable supplies, then VAT incurred can be recovered. If it is used for exempt purposes like renting it out or production of exempt goods or services, then VAT cannot be recovered. However, an election named as opt to tax can be made. Through this election, land and building will be considered as used for taxable purposes. So, since he is renting out 30%, so that will be considered as an exempt use of the land and building. Now, if it is being considered as an exempt use of land and building, what you need to understand is that he will not be able to recover the VAT relating to that portion. And that's first 4 years issue. Okay. So in the first 4 years, 30% of the VAT will not be recovered. But if he goes for opt to tax election, then this exempt use will be simply ignored and 100% of the VAT will be recoverable. So obviously when we'll be solving it, we'll identify it, calculate. We just have to calculate it. No explanations are required. Your calculation should indicate the years in which the input tax would be recovered. 6 easy marks. But obviously your knowledge of land and building rules will be very much relevant here. And then part 3, sale of shares in Paul Limited. On the assumption that Jake sells the Paul Limited shares in the tax year 24-25 for 470,000 and Aunt dies between now and 31st December 26, that is within 7 years of potentially exempt transfer. So see, if you sell off the shares, your business property relief gets withdrawn. If you sell off the shares, your business property relief gets withdrawn. Okay. Explain without carrying out calculations Jake's potential liability to IHT at the time of the sale of the business and on the subsequent death of his aunt, and then calculate the chargeable gain resulting from the sale before the deduction of any available reliefs and explain whether or not the following reliefs should be available: business asset disposal relief and rollover relief. Explain the relief which would be available in respect of any IHT payable following the death of his Jake's aunt. It's 13 marks. It's easy one. First, we just have to explain without calculation. Then we have to do the chargeable gain calculation. Badder will not be available as he didn't work for Paul Limited, and there's no rollover relief on shares. It's just a very, I would say, a stupid question. There is no rollover relief on shares. Rollover relief was in three things: land and building, plant and machinery, and goodwill. So on shares, there is no rollover relief. I don't know why he's asking. He's just playing with the students. Like he's just looking for a very bad student who can say that, okay, rollover relief will be available on shares. So we'll be looking at it when we'll be drafting the answer. Okay, and here it's done. Requirements. You should assume that today's date is 1st January 24. Respond to the instructions in the email from your manager. Split of the mark allocation is shown in Exhibit 3 as we read it. Those were the 40 marks, and 10 marks are for professional skills. I have already given you a lecture on professional skill marks. I hope that you all have watched it. Now, obviously, when we'll be doing these past papers, you'll be getting an application that how you have to get those marks. Professional marks will be awarded for the demonstration of skill in communication, analysis and evaluation, skepticism and commercial acumen in your answer, 10 marks. And now we have to start drafting our answer. Obviously, it's question number one. So it's very important that you remember that you have marks for communication skill. So you have to look at the format. You have to prepare the memorandum for the client file. So make sure that you follow the format. See, memorandum for the client file, notes for the meeting, it's always the very standard format. To, from, subject, date, client name, what issues you are dealing. Just a brief detail, I'll be writing it. You will get a complete idea and just you start answering your requirements. There is no need of any introduction or conclusion in advanced taxation exam. So when we'll be drafting it, it will be very much easier that how you have to deal with it. So making a memorandum, making notes for the client files, it's always a standard and an easy process. Now let's look at it. Now we'll be drafting the actual answer, looking at the approach that how you have to deal with it. We have discussed and read the complete question. Now the actual drafting will start. Okay, let's look at it. Okay, so let's start with the drafting of answer. The question name is Jake. We are making memorandum for client files. Okay, now it's the basic format which you need to understand. In two, you write to the text files. Reason being that it's an internal memorandum. In the from tab, you look at exhibit number 3. You are addressed as text senior. So in from, since you are responding back, so you are the text senior. What is the date of this memorandum? Look at the email which is written to us. The date was 1st January 2024. 1st January 2024. Client name is Jake and subject is or his multiple tax affairs. Now this is the basic format of memorandum for client files. Same format is used when we are making a memorandum or notes for the meeting. Okay, since we are preparing the document for internal use only, so in two, we don't address it to a specific person, we address it to the text files. As it was written in exhibit number 3 clearly that please prepare a memorandum for the client file. So it's not addressed to any particular individual, which we are responding back is to the text files only. It will be included in the text documents of that particular client. In the from, either you are a tax supervisor or a tax senior, you can write any. Since in this question, he addressed us as a tax senior. So in response back, we referred us ourselves as a tax senior. Date given in the question, 1st January 2024 as stated. The client name is Jake and subject is multiple tax affairs because he has asked us for multiple things. Now the part A which we are attempting is becoming tax advisors to Jake. In advanced taxation, there is no need to give any introduction or conclusion. Examiner also do not gives it. Just start the answer drafting directly. Okay, let me repeat it again. You wrote the name of the question, the name of the client which you are answering, memorandum for the client files, or he may ask you to prepare notes for the client meeting to be included in the client files. So whatever he asks, you just give it in the heading to the text files from text senior or supervisor as the question refers you. Date, not the date of your examination, refer the date given in the question. Client name is Jake and subject is multiple tax affairs. Now, many students ask me this thing that, sir, do you have to follow this format always? Yes, this same format is followed always, either being a memorandum or notes for the meeting. Same format is followed. Okay, and it's not from my side, the examiner follows this always. And there is no need to give any introduction or conclusion like you give in advanced audit or other examination. You just make this small format and then you directly start answering the question. Okay. Again, I've included a document on the learning management system on the formats which you have to follow while answering the question. These are the simple steps which you have to follow. And when we'll be doing multiple papers, like this is just the first paper, when we'll be completing 5 papers, you'll have good idea of how to deal with it. In question number 1, since there are marks of communication skill, so making this small format of to, from, date, client, and subject, that will gain you a mark in communication skill. Let's start with the part A. I want you all to listen to me carefully. Becoming tax advisors to Jake. I have not identified any threat to compliance with the fundamental principles of professional ethics, which would arise as a result of becoming tax advisor to Jake. Explain why is it important that we contact the Jake's previous tax advisor. So as I told you that there are 2 reasons, we need to know that what is the reason that the previous tax advisor is no more providing the service. Was it just an administrative reason like they don't want to work anymore, or was there any other concern? And we also want to contact the previous tax advisor to get knowledge of any ethical issues in their knowledge which they want to bring it to our attention. And always remember, being a professional, it's very important for us to contact the previous service provider so that we can know that what was the reason they were not being continued, and state any other actions which we should take before we agree to become the Jake's tax advisor. So we'll require the documents relating to his source of income, his identity, to make sure that his existence is real, he has no illegal involvement, and his source of income is legitimate. So this is just a brief list of things which you have to do. Again, as I told you that I've included a document relating to ethics. You just read it. And when we'll be doing these past paper question, you will get a good application also. Okay. So it's a 5 marks question. Just make small points. Okay. 1 mark for each. Don't use a bullet point. Small paragraph points. Those are sufficient. So let's draft it. See, as I told you that when I'll be drafting it with you people, it may take extra time. But the benefit of doing that you get an idea that, okay, how you have to actually write the point. Okay. So what he has asked us first, explain why is it important that we contact the Jake's previous tax advisor. It is important to contact Jake's previous tax advisor in order to know the reason of their not continuing service of Jake. Okay, if it was just an administrative reason, like they don't want to continue it, then our firm can accept Jake's engagement. However, if any ethical concern exists, then our firm may not accept Jake's engagement, Jake's tax engagement. Like, for example, they tell you that Jake has not paid their fees. So then that will be an ethical concern. Or for example, they say that Jake was asking them to do any illegal thing and that's why they were not continuing the service. So then in that case, we'll not be accepting that engagement. So it is important to contact Jake's previous tax advisor in order to know the reason of their not continuing service of Jake. Okay. If it was just an administrative reason, then our firm can accept Jake's engagement. However, if any ethical concern exists, then our firm may not accept the Jake's tax engagement. Further, our firm will also want to know any other ethical concern which previous tax advisor want to bring in knowledge of our firm before accepting, before our firm, knowledge of our firm before we accept Jake's tax engagement. Okay, those ethical concerns may affect our firm's decision to accept the engagement. So see, there are two things. First, we want to know the reason. In order to know the reason of their not continuing service of J, first we not want to know the reason that why they are not continuing the service. And secondly, we want to know any other ethical concern. Like for example, they can say that um, we are not continuing the service, it's just our decision, but we want to bring it to our attention that Jake's create a pressure too much on your deadline. He'll be pressurizing you too much. He may be asking you to do these things. So any other ethical concern which they want to bring it to our attention. Okay. Now, contacting previous tax advisor is an important requirement, for accepting new engagement. And if Jake will not permit it, then our firm may not accept this tax engagement. It is so important to contact the previous tax advisor that if Jake will not allow us, if Jake will not permit us, then maybe we'll not accept the engagement or we'll not be continuing with the service. See, as I told you, just discussing the point and reading the examiner answer, that's also a very easy approach. But when I draft the answer with you people, you get a real idea that, okay, how you have to write it. It's just very easy. Whatever thing you have in your mind, you just put it on the screen, you just type it. So it is important to contact the Jake's previous tax advisor in order to know the reason of their not continuing service of Jake. If it was just an administrative reason, like maybe they don't have time or maybe they are not agreeing on the fees, then our firm can accept the Jake's engagement. However, if any ethical concern exists, then our firm may not accept the Jake's tax engagement. Not just the reason of their resignation, we also want to know, our firm will also want to know any other ethical concern which previous tax advisor want to bring in knowledge of our firm before we accept Jake's tax engagement. Those ethical concerns may affect our firm's decision to accept the engagement. Contacting previous tax advisor is important for accepting new engagement. It's a requirement for all professionals. Okay, and if Jake will not permit it, then our firm may not accept this tax engagement. Obviously, we contact the previous tax advisor with the permission of Jake, because obviously Jake will tell that previous firm that okay, you can allow and respond that. Just think about an example. For example, if I write a letter to the previous tax advisor that tell me the ethical issues, so that previous advisor will be thinking that who I am to write this letter. They'll obviously verify from Jake that we have received a letter for you. Shall we respond? Is he your proposed advisor? Like, let me repeat it again. For example, if I just go and write it a letter to a firm that I will be a new advisor, tell me the ethical concern. So they'll just not directly respond me. They'll first confirm from the client that we have received a letter from your proposed service provider. Shall we respond him? Because they need to verify that whether I'm in actual a proposed service provider or not. Otherwise, anyone can leak that data. So obviously that's done with the permission of the client, and that client here is Jake. So if Jake will not permit us contacting the previous tax advisor, then obviously we cannot accept the engagement. So Jake has to permit us to contact the previous tax advisor. Jake will intimate the previous advisor that okay, my new service provider will contact you, so you can respond him. Okay. Now, obviously, if Jake will have something in his heart, he will restrict us to contact the previous advisor. But if he's a good man, if he's a neutral man, if he's transparent, he'll say, okay, contact the previous advisor. I don't care. Okay. Now you must be thinking that, sir, if previous advisor will falsify anything, so obviously Jake will take him to the court that why you gave false reference about me. Okay, because when we'll say no, we'll tell that okay, this was the reason we are rejecting your engagement. So if the Jake is an innocent man, he'll obviously allow us to contact the previous advisor. But if he has something to hide, he'll restrict us. So we want to know the reason of the resignation, and we want to know any other ethical concern which the other tax advisor want to bring it to our attention. What else he asks? State any other actions which we should take before we agree to become Jake's tax advisor. Our firm should obtain documents relating to Jake's nationality and residency in order to verify that the client to whom services are being provided is not involved in any illegal acts. Further, documents in relation to Jake's source of income will also be required in order to verify that any illegal incomes are not involved. Now, see, these are the basic steps which we always do while we are accepting the engagement, because we obviously want to make sure that to whom we are providing the service is a legitimate person and the income which he's obtaining, that's also an acceptable one. So, if you look at it, it was just a 5 marks requirement that what we should be doing before becoming a tax advisor. It's important to contact the previous tax advisor to know the reason. Okay. Secondly, any ethical concern, and contacting the previous advisor is a very important requirement. Then, documents about nationality and residency, about sources of income, these all are the important ones. Okay. So when you are dealing with a requirement relating to ethics, and it's a 5 marks requirement, it's just writing 5 brief points. Okay. Again, sir, how we have to deal with these requirements? When we'll be doing these past papers, you'll obviously get an application. And as I told you, I have prepared a document for this, like all the possible requirements which the examiner normally asks, and you have to deal with it in a normal manner. Okay. Like even it's not a separate chapter in our course, also, the examiner expects that this is a basic data which a student should understand. That why we contact the previous advisor to know the reason of their not continuing services, any other ethical concern they want to bring to our attention. It's an important requirement. What other actions we'll be taking? We'll be taking documents in relation to your nationality, residence. Like just think, you go and get a bank account open. The branch will be asking you multiple documents to verify that whether you are a legitimate guy or not, whether anything illegal is getting involved or not. Because if any illegal thing is happening, they'll obviously avoid becoming party with it, because that will create liability for them. Their documents in relation to source of income, any previous inquiry which has happened against you from the tax perspective. So all of these things will be required before accepting your tax engagement. So it was a brief requirement of 5 marks, like becoming a tax advisor. Why is it important that we contact the previous tax advisor and state any other actions? So it was just a 5 marks requirement. Okay. Again, as I told you that my approach is a bit detailed one. I draft the complete answer with you people so that you can have an idea that, okay, how you have to write it. So it's not like some specific technique which you have to use. It's just answering what the examiner has asked and following it in a simple manner. Okay. Like drafting the straight points, and even it's a small point, then also it's acceptable. What the examiner asks is that you are answering what he's requiring it. Okay. So becoming tax advisor, it's important to contact the previous tax advisor to know the reason of their resignation or not continuing, any other ethical issue. It's important before accepting the engagement. We need documents in relation to nationality and residency and the source of income. Now let's move forward. Part B. So now part B is relating to new unincorporated business. Okay, here we go. Part B, new unincorporated business. And within that part B, first we are doing one which is insurance proceed available for investment in business. Okay, so here it comes. Now let's go and read the relevant data that what is included in it. Now, okay. On the assumption that the construction of yak, okay, we have to start from here. When carrying out task 1 and 2 below, you should ignore the alternative plan for the use of yak building, in which the option was to rent it out, the 30% renting out, and simply assume that whole of the yak building will be used for the purpose of carrying on Jake's unincorporated business. You should ignore that, okay? Insurance proceed available for investment in the business. On the assumption that the construction of the yak building will be completed and paid for on 1st February 2024, explain the relief available to Jake in respect of the chargeable gain resulting from the destruction of wall building. So now, if Jake will reinvest the insurance proceeds of wall building in construction of yak building, then gain of wall building arising due to insurance proceeds can be deferred, as insurance proceeds are being reinvested in 12 months of their receipt. Let me repeat it again. See, if Jake will reinvest the insurance proceeds of wall building in construction of yak building, then gain of wall building arising due to insurance proceeds can be deferred, as insurance proceeds are being reinvested in 12 months of their receipt. See, you just have to be very straightforward in answering your question. Like, it's no specific format. Okay. On the assumption that the construction of the yak building will be completed and paid for on 1st February 2024, explain the relief available to Jake in respect of chargeable gain. So what relief is that the gain on wall building arising due to insurance proceed can be deferred. If you remember here, uh, as you know, I own the wall building. It was destroyed by fire. I understand from the discussion that the insurance proceed of 380,000 resulted in a gain of 130,000. Okay, so now he's using the insurance proceed to have a new building, yak building constructed on the site. Okay, so his gain will get deferred. Now, the proceeds were received on August 23, and if he completes the construction by 1st February 2024, so that's within 12 months. Okay, now just look at it. Insurance proceeds received were how much? If you just go and look at it, it was 380,000. I'm copying the pound sign by Control C, and here I will paste it anywhere I want by pressing Control V for paste. Insurance proceeds received were 380,000, whereas amount reinvested in yak building is how much? Is 335,000, and we have to ignore VAT in this part. It was clearly stated in the question. Is 335,000. As partial proceeds are reinvested, therefore part of the gain will be deferred and partially it will be chargeable. Okay, gain chargeable will be lower of gain and cash in hand amount. Rest of the gain will be deferred against base cost of yak building, and it will get chargeable when yak building will be disposed later on. Okay, just listen to me carefully. I'll repeat the things also again. So what he's asking, explain the relief available to Jake in respect of the chargeable gain resulting from the destruction of the wall building. So if Jake will reinvest the insurance proceeds of wall building in the construction of yak building, then gain of wall building arising due to insurance proceed can be deferred, as insurance proceeds are being reinvested in 12 months of their receipt. Insurance proceeds received were 380,000, whereas amount reinvested in yak building is 335,000. As partial proceeds are reinvested, you haven't reinvested the entire amount. Therefore, part of the gain will be deferred. The partial gain will get deferred, and partially it will get chargeable. Gain chargeable will be lower of gain in cash in hand amount. Rest of the gain will be deferred against base cost of yak building, and it will get chargeable when yak building will be disposed later on. Okay. Cash in hand after reinvestment is how much? 380,000 minus 335,000. So 380 minus 335, it's 45,000. Whereas gain amount is how much? It was written in the question. The gain amount is 130,000. Gain amount is 130,000. Lower of gain and cash in hand will be chargeable. Will be chargeable now, which means chargeable gain will be 45,000, and remaining gain of 130,000 minus 45,000. How much? 85,000 pounds will be deferred against base cost of yak building. See, I particularly believe that it's not difficult. It's just something very basic working at advanced taxation level. Like the asset get destroyed, you are reinvesting in a new asset, the gain will get deferred. It's a situation of partial reinvestment. Like it's an easy one. And what I want to teach you from drafting of these answers, like typing these actually, see, being a teacher, it's easy for me that I just discuss the answer and open the screen and read it for you that, okay, you have to do this. But when I draft it with you people, I want to give you an insight, a confidence that, okay, you can do it. It's not like something specific format. It's just writing it down. Whatever is in your mind, whatever you think the rules are, just put it on the screen. Don't do overthinking. Don't go for perfection. Just be relaxed and put it down. So see, you just said that, okay, we are reinvesting the proceed, the gain will get deferred. You identified that it's partial reinvestment because you got 380,000, you are reinvesting 335,000. We have to ignore that. It was written in the question. So, okay, partial proceeds are getting reinvested. So, lower of gain and cash in hand will get chargeable now, rest will get deferred. You did the calculation thing. So this is what he asked. Explain the relief available to Jake in respect of the chargeable gain. So this is the relief that 85,000 of the gain will get deferred. Now what else he's asking? Just look at it. On the assumption that Jake claimed the relief as you have identified in the part 1, like he defers the gain and will have total income of 30,000 pounds, calculate the amount of post-tax insurance proceeds which will be available after the construction of yak building for the investment in new business. Now on this gain, the chargeable gain is 45,000 pounds. 85,000 pounds is deferred. Okay. On chargeable gain of 45,000 pounds, tax will be. Now, what will be the tax on it? Just look at it. Believe me, it's very easy. Let's add a table here. Okay. Now, if someone want for the calculation of tax, he can go and use the spreadsheet also. I recommend to use a table so that everything is easier. You do it on the single screen only. The chargeable gain is 45,000 pound as you yourself identified. It was lower of gain and cash in hand. Okay. You deduct your CGT annual exemption. That's 6,000 pounds. And here comes your taxable gain, which will be 39,000 pounds. I believe it's not difficult. You already know your annual exemption. Now you have to calculate your capital gain tax. Okay. For capital gain tax, he has stated here that you have to assume that his total income in the tax year is 30,000 pounds. So you need to look at your basic rate band. Okay. I will add a small table here. My total income given in the question is 30,000 pounds. The personal allowance you all know 12570, and this is my taxable income. So it's 17430. Your basic rate band is 37,700. Now, what is your remaining basic rate band, which will be used in CGT? The remaining basic rate band is 20270. So please repeat it again. No issue. We'll repeat it again. Just a second. Now, see, your chargeable gain was 45,000 pounds. You yourself calculated. Lower of gain in cash in hand gets chargeable now. And remaining gain of 85,000 is deferred. You adjusted your annual exemption. You got your taxable gain. Now you have to calculate the capital gain tax. So obviously that is dependent on the basic rate band which will be available. Okay. That's dependent on the basic rate band which will be available. Okay. So you need to look at the basic rate band. Your total income is 30,000 pounds. Personal allowance is 12570. You got your taxable income. Your basic rate band is 37,700. Remaining basic rate band is 20270. Now just use your mind. Okay. Need to add a row. Now just use your mind. On 20, 270, the rate of CGT is 10% because that's in the basic rate band. So that will be 2027, and remaining gain 39,000 minus 20270 on the remaining, the CGT rate is 20%. I'll repeat it again, 20270, it's 20%. So that's 3746 pounds. So what will be your total CGT? Here it's 2027 plus 3746. So it's 5773. So please repeat it again. Okay, let me repeat it again. See, you had a chargeable gain of 45,000 pounds. You deducted your annual exemption, you got the taxable gain. Now, your total income, he gave it in the question because CGT depends on the basic rate band, and that basic rate band comes from the income tax return. Total income 30,000 pounds. You deduct your personal allowance of income tax, you get your taxable income. Okay, basic rate band is 37,700. The remaining basic rate band is 20270. Now, till the basic rate band, the rate of CGT is 10%. So 20270 into 10%, that's 2027. And on the remaining taxable gain, look at your taxable gain. On the remaining taxable gain, you charge 20%. See, our objective was not to calculate the income tax. We just wanted to identify the remaining basic rate band which will be used in CGT. 20270 into 10%, that's 2027. On the remaining taxable gain, you charge 20%, and that gives you the total CGT. Okay. Now, what he's asking, calculate the amount of post-tax insurance proceed. Just use your mind. Okay. Now, post-tax insurance proceed. Okay. What he's asking, post-tax insurance proceed, which will be available after the construction of YAC building. Okay. Just copy this statement here. Post-tax insurance proceed, which will be available after the construction of YAC building for the investment in new business. Okay. Just look at it. Very easy. Will be, what is your insurance proceed? What was your insurance proceed? Your insurance proceed was 380,000. Here comes your insurance proceed, 380,000. What is the tax which you are paying? 5773. Okay. That comes your post-tax proceed. Just listen to me carefully. It's 374,227. What else is asking? After the construction of YAC building. Okay. So what's the construction cost of YAC building? We already know. The construction cost of YAC building was 335, which we reinvested. 335,000. So post-tax insurance proceed after construction of YAC building. So what is that? 39,227. So will you repeat it again? Obviously, you know, I'll repeat it again. There is nothing to worry about. Delete this column. Here is our post-tax proceed, and this is post-tax insurance proceed after construction of YAC building. Believe me, this requirement was of 8 marks, and in my opinion, it's not difficult. For a student of advanced taxation, it's just a very easy one. Okay. Now, let me repeat it again. Explain the relief available to Jake in respect of the chargeable gain resulting from destruction of wall building. So if Jake will reinvest the insurance proceed of wall building in construction of YAC building, then gain of wall building arising due to insurance proceed can be deferred as insurance proceeds are being reinvested. That's the relief, that the gain can be deferred. Insurance proceed received were 380,000, whereas amount reinvested is 335. As partial proceeds are reinvested, therefore gain will be deferred. Part of the gain will be deferred and partially it will be chargeable. Gain chargeable will be lower of gain and cash in hand. You already know the rules of destruction of asset. Just go here, write destruction. Here it comes. If it's partial proceed, lower of will be chargeable now. Gain and cash in hand. Here it goes. Gain and cash in hand, lower of will be chargeable now. Rest of the gain will be deferred. So cash in hand is 45,000, whereas gain is 130,000. Lower of gain and cash in hand will be chargeable now, which means chargeable gain will be 45,000. Remaining gain of 85,000 will be deferred. So now this is your chargeable gain. This is your annual exemption. You got the taxable gain. Okay. Now, just a second. Now, once done with that, he said that you have to calculate the capital gain tax. Okay. He asked us to calculate the capital gain tax. So we said, okay, the capital gain tax, for that we need to look at the income tax band, total income that was given in the question, and the total income given was 30,000 pounds. So if the total income given is 30,000 pounds, we said that, okay, personal allowance is 12570. You get your taxable income. Now your taxable income amount is 17430. Okay. Now, how did you get this total income? It was given here in the question that you had total income of 30,000 pounds. Okay. Now, basic rate band is 37,700. I hope you all know. That gives you your remaining basic rate band 20270, which will be used in CGT. Please make sure that you don't do silly mistakes like 20270 into 10% is 2027. Sometimes you make transposition errors like you write a wrong number. So that will lead to small losses of marks, not the complete one. 39,000 minus 20270 on the remaining, you charge 20% of rate for CGT. That comes your total CGT. He asked for post-tax insurance proceed. We said, okay, this is your insurance proceed. This is the tax. This is the post-tax proceed. Then he asked, after construction of YAG building, you invested 335 on YAG building. So this is your post-tax proceed after the construction of YAG building. Now, sir, how do you add a new row? Stand on the last cell, press the tab button, and the new row gets added. Okay, you can do it manually also through your mouse, like add a row, or you can simply delete the rows also. Okay, now some quick questions. Like students say that, sir, in the actual examination we'll have a lot of stress. So if we are not able to do the presentation like this, will it be acceptable? The examiner says that your presentation should be reasonable, not accurate. Reasonable presentation such that the answer is understandable. Obviously, my presentation would be much better than yours because I have a lot of practice of using this platform. And I'm not doing it in an exam situation, which is a stressed out situation. So in the examination, maybe your presentation is not as much good. Okay. And similarly, some students ask that, sir, what about making these pound signs? Is it necessary to make the pound sign, like the pound sign which I've used? If you use it, it's better. If you don't use it, then also it's acceptable. Okay. But using it is easy, like just Control C and Control V every time. You keep it in copy and then just you press the paste button. Okay. Doing these column size and everything, these are not mandatory things. I just like to do it because I like the beautiful screen. Okay. But for that, in examination, it's not a mandatory thing. So if you look at it, how many marks we are done with? 5 marks relating to ethics, and then these 8 marks. Relief due to reinvestment and the post-tax. So we calculated the tax on the insurance proceed, which will be available after the construction of YAG building for the investment in the new business. So first we explain the relief, that okay, since you are reinvesting, so the relief is that your gain will get deferred. We discuss the relief. Okay, we quantified the amount, that what will be the relief. Then we calculated the gain, then the tax, and here comes the post-tax proceed available for investment in business after the construction of YAG building. I believe that you people are understanding it. Now let's look at part 2. That's also 8 marks, and that's also an easy one. Tax deduction in respect of the expenditure to be incurred. I'll copy this requirement and I will paste it here. I believe that you are understanding the things, but still, if you have any query at any point of time, you all have my WhatsApp number to contact. Okay, so let's look at this part 2 now. In part 2, he's asking us about what? Let's look at it. Explain when, if at all, Jake will be able to obtain a tax deduction for the cost he is likely to have incurred in respect of visiting the potential customers. Explain the tax deductions which will be available in the Jake's first trading period ending on 30th April 2025 in respect of the cost of construction of the Yak building and the purchase of the car. Now it's an 8 marks requirement, and believe me, it's an easy one. First, we have to discuss about the tax deduction which will be available for the expenses of visiting the potential customers, tax deduction for construction of yak building and purchase of the car. Let's go and look at the scenario first, and then we'll be drafting the answer. Here is that part: expenditure to be incurred in relation to the new business. I will incur the following expenditures in relation to the new business. On 1st February 2024, I will complete the purchase of the newly constructed yak building. Any post-tax insurance proceed remaining after construction of the yak building will be invested in my new business as follows. Between now what is now? Now is the date when the Jake wrote us the email, that's 1st January 2024 and 30th April 2024. I will travel extensively throughout the UK in order to visit potential customers and persuade them to place orders for my products. Now, if you look at the start date of the business, that's 1st May 2024. So, whatever traveling he is doing between now and 30th April 2024, that's pre trading expenses. Now, pre-trading expenses are an allowed expense as they are incurred on first day of the business if they are incurred within 7 years prior to start of business. Here it's within 7 years, it's like just within 3 months only. So yes, it will be an allowed expense. Now, the traveling cost will be an allowed expense if it's exclusively for the trade purpose. There shouldn't be any private purpose involved. Okay, visiting the customers, it's an allowed expense, but you need to understand here that cost of entertaining the customers is not an allowed expense because tax department do not considers it as a valid expenditure because that's like gaining an unfair advantage to gain the customers. So if you read it, explain when, if at all, Jake will be able to obtain a tax deduction for the customer for the cost he's likely to have incurred in respect of visiting potential customers. So let's first answer it. Jake will be able to claim allowed expense in relation to cost he's incurring in visiting potential customers in first year of his trade. These outflows are incurred before start of business. Therefore, it will be treated as pre-trading expenses. As they are within 7 years of start of business, therefore, they will be treated as incurred on first day of business. Okay, so first you explain the rule about pre-trading expenses. See, I'll repeat it again. It's not about taking any stress or writing it in a special manner. So whatever rule you know, you just put it on the screen. Okay, now cost of traveling to potential customers will be an allowed expense from trading P&L if that cost of traveling is exclusively for business purpose. Like it shouldn't be like that I'm going for a vacation and I visited few customers also. It's not like that. The cost of traveling should be exclusively for business purpose. However, it is to note that cost of customer entertainment is not an allowed expense from trading P&L. Okay, cost of customer entertainment is not considered as an allowed expense because tax department do not considers it as a fair expenditure. Okay, so let me repeat it again. As I told you, it's a very easy one. Explain when, if at all, Jake will be able to obtain a tax deduction for the cost he's likely to have incurred in respect of visiting potential customers. So Jake will be able to claim allowed expense in relation to cost he's incurring in visiting potential customers in first year of his trade. Okay, these outflows are incurred before start of business, therefore it will be treated as a pre-trading expenses. As they are within 7 years of start of business, therefore they will be treated as incurred on first day of business. So you can claim your allowed expense in the first year accordingly. Cost of traveling to potential customers will be an allowed expense from trading P&L if that cost of traveling is exclusively for business purpose, like just cost of traveling doing meetings. Customer entertainment like taking gifts and things like that, that's not allowed expense. Okay, because tax department do not consider customer entertainment as a fair expenditure. Because if that would be allowed by the tax department, then it would be like using it to bribe the customers and getting the tax benefit also. Then explain the tax deduction which will be available in the JX first trading period ending on 30th April 25 in respect of the construction of YAG building. So, YAG building will be constructed on, uh, will be completed on 1st February 2024, whereas business will start from 1st May 2024. It will also be a pre-trading outflow, and as it is within 7 years of start of business, therefore this outflow will be assumed to occur on first day of business. Okay, you all know the rule about the pre-trading outflow, and if you have forgotten anything, just go to capital allowances and you will be able to find all the rules relating to capital allowances for pre-trading outflows, and everything that assets purchased within 7 years prior to start of business are shown as the purchase in first year of business. Okay, now in construction cost, included in construction cost of YAG building, 75,000 pounds, if you remember, they relate in respect of electrical systems and electrical system, heating system, and other integral features. If I just copy the entire thing, okay, includes in construction cost of YAG building is 75,000 pounds in respect of electrical system, heating system, and other integral features. These outflows will qualify for capital allowances. Okay, it will be covered through annual investment allowance. You all know the annual investment allowance, and as a result, entire amount of 75,000 pounds will become an allowed expense in capital allowance pool. Okay, further, remaining cost of YAC building of how much? The building costed 335,000, and from this 75,000 is for electrical system. 335,000 minus 75,000. So 335 minus 75. So it's 260,000 pounds will qualify for structure building allowance. Now, I hope you all remember the rules of structure building allowance. It will be considered, or allowed expense will be available on it at rate of 3% per year. In year ended 30th April 2025, if I'm not wrong, in the year ended 30th April 2025, allowed expense will be how much? 260,000 into 3%. So that's 7,800 pounds. So, see, as I told you, I particularly believe that these 8 marks are just an easy one. Cost incurred in respect of visiting the potential customers. The traveling cost is an allowed expense if it's exclusively for the trade. Cost of entertaining the customers is not an allowed expense because that's an unfair advantage. On the integral features, 75,000, you qualify for capital allowances. It will be covered due to annual investment allowance. Otherwise, it would have been included in special rate pool. And on the remaining cost of the building, you get the structure building allowance. Then about the purchase of the car. So let's look at it. On 1st May 24, it's being purchased on the first day of the business. I will purchase a new car. I will use 65% for business and 35% for private. This will not be a zero CO2 emission car. Okay. Purchase of car on 1st May 2024 will qualify for capital allowances in year ended 30th April 2025, which is the first year of business. No annual investment allowance is available on cars. I hope you all know. Okay. As car is not a zero CO2 emission car, therefore, it will either be relieved in main pool or special rate pool. I hope you all remember this. If CO2 emission rate is less than 50 grams per kilometer, then it will be relieved in main pool and its rate of allowance will be. I hope that you remember all of these rules. See, if you don't remember anything, you can just go to text rate sheet and you can look at the rules. If it's between 1 and 50 grams, it's main pool. Otherwise, it's a special rate pool. Okay. If you go to main pool, you have a rate of allowance of 18%. In special rate pool, your rate of allowance is 6%. Okay. So in main pool, the rate of allowance will be 18% per year. If CO2 emission rate is more than 50 grams per kilometer, then it will be classified in special rate pool and rate of allowance will be 6% per year. Further, capital allowance will be available on 65% portion only, as 65% use of car will be for business and 35% use is for private purpose. Okay, that was written in the scenario. You can go and refer it, that I will use 65% for business purpose and 35% for private purposes. You already know that capital allowances are only on business use portion only. Now, if you look at this requirement, believe me, it was an easy one. An 8 marks requirements, and it was just a very easy and a brief answer. You can just go and refer the answer like you are getting 8 marks for this much. Believe me, it's very easy. Like if you look at the answer, what he asked us was the cost incurred in relation to respect of visiting the potential customers. So we said that, okay, cost of traveling to the customers is an allowed expense if it's exclusively for the business. There should be no private purpose getting involved. The important thing was that it was a pre-trading expense because it was incurred till 30th April 24 and we were starting our business from 1st May 24. So pre-trading expenses are allowed expenses if they are incurred within 7 years prior to start of the business. Okay, so you referred all of those issues. Then in relation to the building, the machinery part, the integral features which are involved that will qualify for capital allowances, you referred the annual investment allowance thing. On the rest of the value of the building, you will be getting structure building allowance because when you exclude the plant and machinery part, on the rest you can go for structure building allowance. For cars, there is no AIA. Okay, you treat it as a normal purchase of asset, and here it was written that it was not a zero CO2 car. So if it would be a zero CO2 car, there would be 100% allowance. Since it's not a zero CO2 car, so it will be treated either under main pool or special rate pool. If it's less than 50 grams, so it's main pool. Otherwise, it will be going in special rate pool. And you will be getting the capital allowance on 65% portion only, as 65% use of the car will be for business and 35% use is for private purpose. Like, I particularly believe that at advanced taxation level, this much answer for 8 marks, that's an easy thing. Like, how many marks we are done till now? 5 marks relating to ethics, then 8 marks for this basic CGT calculation for destruction of asset, and then 8 marks relating to allowed expenses for the cost incurred and the capital allowance rules. So I believe that it's not a difficult one. Till now, the answer has been very easy. Now let's move towards part 3, which is alternative plan for the use of yak building. That's also a requirement for 6 marks, and I hope you all remember that it related to value added taxes. Okay, now let's look at it, that what he's asking to us in this part. Alternative plan for the use of yak building. When carrying out this task 3, you should assume that the alternative plan for the yak building is followed. Now, what was the alternative plan? The alternative plan was that 70% will be used in the business and the remainder will be rented out. Okay, and that will be done for 4 years. After 4 year period, it will be shifted to the business use completely. Okay, now I can confirm that the supplies to be made by the Jake's business will be wholly standard rated. However, due to application of the capital goods scheme, Jake's ability to recover full £67,000 of the input tax over the life of the building will be restricted unless he opts to tax. Because if he rents out the building, obviously 30% of the building will be considered in exempt use. Calculate the maximum amount of additional input VAT which Jake could recover if he were to opt to tax the Yak building on 1st May 2024. Now we have to talk about additional. So we have to develop a comparison. Your calculation should indicate the years in which the input tax would be recovered. I want you all to listen to me carefully. If opt to tax election is not made, then what will happen? Then input tax recoverable will be, then what will be the input tax recoverable? And if opt to tax election is made, then input tax recoverable will be. Okay, so what will be the additional input tax recoverable due to opt to tax election? So see, what we have to do is, if you look at it, calculate the maximum amount of additional input tax which Jake could recover if he were to opt to tax. So we have to think like that if the election is not made, then what's the recoverable amount? If the election is made, then how much he'll be recovering? And then obviously we'll get the additional amount. Like additional means the difference. Okay. Now, if opt to tax election is not made, then input tax recoverable will be how much he'll be able to recover. Okay. In this case, Jake will only be able to recover input tax in relation to actual taxable use of building, in year of purchase. This taxable use is 70%. Okay, input tax recoverable will be 67,000 into 70%. Just have some patience and listen to me carefully. This is the full input tax he has provided you. Now you must be thinking that how he has calculated it. See, first of all, it's not necessary to look at its reason. But if you want to look at it, the building was purchased. Okay, it's in Exhibit 1. The building was purchased for how much? It was purchased for 335,000 plus VAT. So 335 into 20%, that's 67,000. But the examiner has provided you the full input tax value ready-made 67,000. So it's not necessary to look for its reason. Okay, just look at it. Will be 67,000 into 70%. So that will be 46,900 pounds. This will be recovered in year ended 30th April 2025. Okay, now that was the first year. If you remember, the business is starting on 1st May 2024. Okay, the business starting on 1st May 2024 and 30th April is the year end. Now, this taxable use will continue for the 4 year period. Okay, now, same taxable use will continue for next 3 years. Okay, after year of purchase. See, year of purchase is first year and then next 3 years. No change in input tax. no change in input tax amount. Okay, there will be no change. Whatever you have recovered, it will remain same. Or you can say no adjustment will be required for input tax amount. Okay. However, after 4 years, when uh, from purchase date, when taxable use will increase to 100%, Jake will be able to recover additional input tax every year for 6 years till 30th April 2034. Like year end was 30th April 2025, that was the first year. Then 26, 27, 28, 29, 30, 31, 32, 33, and 34. So for 6 years, you will be able to recover additional input tax for 6 years. Okay, I'll repeat it again. So just have some patience and listen to me. Additional input tax recovery every year will be 67,000 was your total input tax divided by 10 years multiplied by 100% minus 70%. The increase in taxable use. Just listen to me carefully. I'll repeat each and everything again. 67,000 was your total input tax. Okay. Divided by 10 years. Since it's land and building, your taxable use has increased by 30% in every year. Because then you will be using this building completely for your business. So divided by 10 years. So that's a recovery of 2010 pounds. Total input tax recovery in 6 years will be 2010 into 6 years 12060. Okay, in case of no opt to tax election, total input tax recovered is you recovered 46,900 in the first year and then 12060. I will repeat it again. I know that you must have some confusions in your mind. So just have some patience and listen to me. So in this case, it will be 58,960 pounds. Let me repeat it again. See, in the examiner answer, he has just done the calculations directly. I'm writing some brief footnotes so that you can understand what I'm doing. If someone would have done only the calculation thing, like only writing the year and the amount, that would also be acceptable. Okay, let's repeat it again. If opt to tax election is not made, in this case, Jake will only be able to recover or will only recover input tax in relation to actual taxable use of building in year of purchase. This taxable use is 70% because other he is renting out. Input tax recoverable will be 46,900. This will be recovered in year ended 30th April 2025, which is your year of purchase. Same taxable use will continue for next 3 years. First is the year of purchase and then next year's total 4 years. No adjustment will be required for input tax amount. However, after 4 years from purchase date, when taxable use will increase to 100%, Jake will be able to recover additional input tax every year for 6 years till 30th April 2034. Additional input tax recovery every year will be 67,000 divided by 10 years since it's land and building into 100% minus 70%. If anyone do not remember the rules, just write land and building and go in VAT, in value added tax rules. Okay, just a second, here it comes. Okay, that VAT in relation to land and building, VAT in relation to computers. Just remember all of the rules relating to land and building, that how you deal with it. And since he's referring the capital goods scheme also, so for land and building, you monitor it for 10 years for the changes in taxable use. Okay, so if you just look at it, in land and building, it's for 10 years into 100% minus 70%. So 2010 is the per year recovery amount. For 6 years, it will be 12060 pounds. In case of no opt to tax election, total input tax recovered is 46,900 in the year of purchase and 12060 for 6 years. Okay, now just have some patience. If opt to tax election is made, then input tax recoverable will be. In this case, 100% of input tax will be recovered and actual taxable use will be ignored. Okay, renting out 30% portion, which is an exempt use, will be ignored in this situation as opt to tax election is made. Okay, whole of input tax amount will be recovered in year of purchase of 67,000 in year ended 30th April 2025. No adjustment will be required for change in taxable use. Okay, so what's the additional input tax which is recovered due to our election? Okay, additional input tax recovered due to opt to tax election is 67,000 pounds minus 58,960 pounds. So this is what we have recovered additionally, and that's 8,040 pounds. Let me repeat it again. Okay, normally students get confused in these VAT rules of land and building and capital goods scheme. Let me repeat it again. See, if the election of opt to tax is not made, when you make the election of opt to tax, you recover the entire VAT, but then you have to charge it also on the customers. Okay. Now, in this case, Jake will only recover input tax in relation to actual taxable use. He has not made an election of opt to tax. So, only actual will be followed. 70% you recover in the year of purchase. For next 3 years, there is no change in the taxable use. We have rented out 30% of the portion. However, after 4 years from purchase date, when taxable use increases to 100%, we will be recovering 2010 every year. The monitoring period is 10 years for land and building. 4 years are done, remaining years are 6. So total you have recovered is 46,900 in the year of purchase and then 12,060 total in 4 years. In the 6 years period when your taxable use increased to 100%. So the total input tax which you have recovered is 58,960 pounds. Now, if this election is made, then ignore your actual taxable use, recover 100%. Even if you are making an exempt use, ignore that. Recover 100%. Now, you must be thinking that, sir, we are getting recovery of 100%. That's good. Why tax department is permitting us? Now, what will happen is that your entire land and building will be considered for taxable use. Now, on the rent out portion, you'll have to charge VAT on the customer also. Like normally, if it would be an exempt use, there was no need to charge on the tenant. There was no rent on the tenant. You were not charging it. But when you make the election of opt to tax, now you'll have to charge VAT on your customers also, who are your tenants, on this rent out portion also. So you are recovering the input tax, but tax department will also get VAT recovery from your tenants, which is the VAT on the customers. Okay. But currently our focus is input tax only. So what additional we have recovered? That's 8,040 pounds. See, if there is no election, you only recover according to your actual taxable use. In the first 4 years, 70% is the taxable use. In year of purchase, you recover 70% of total. In the next 3 years, there is no adjustment because 70% remains the taxable use. After 4 years from purchase date, when taxable use increased to 100%, which is written here, by the end of 4-year period, my business should have grown sufficiently to require the use of whole building. So at that time, divide by 10 years, 100 minus 70, per year you will be getting 2010 pounds. For 6 years, it will be 12060 pounds. So no election, total you recover 58,960. If you make the election, ignore your actual taxable use, recover 100%. All in one go. All in one go. Okay? And there is no need of any change in taxable use because you have made the election of opt to tax. So you just follow the 100% taxable use. So what I believe is 6 marks, again, it's an easy one. Just your concept for land and building and capital goods scheme need to be very much clear. And I have done extra, I have done this commentary also. The examiner only required calculation, like just make a table and make a calculation that will recover this in particular. That's also acceptable. But I expect that we should write some footnotes so the answer is more understandable. If no election, you recover according to your actual taxable use. If election is made, then 100% is recovered. I hope that you people are understanding it. Now comes the last requirement, which is a 13 marks requirement, and that sale of shares in Paul Limited. Coming to the last requirement, the question is almost done. I hope that you people are understanding it. Okay. Like, I believe that this question is not a difficult one. Okay. So let's look at this requirement of sale of shares in Paul Limited, that what he's asking in it. Okay. Let's look at it. On the assumption that Jake sells the Paul Limited shares in the tax year 24-25 for £470,000 and that his aunt dies between now, 1st January 2024 and 31st December 2026, that is within 7 years of potentially exempt transfer, explain, without carrying out any calculation, Jake's potential liability to inheritance tax at the time of the sale of the shares and on the subsequent death of his aunt. So we have to explain the IHT implications, but no calculation is required in this particular head. Then the second is in relation to chargeable gain, but let's deal with this IHT thing first. Okay, I want you all to listen to me carefully. It's an easy one. Just concentrate on it. Okay, Jake's potential liability to inheritance tax at the time of the sale of the shares and on subsequent death of his aunt. Now, even before referring to the scenario, I can write one comment. There will be no IHT implications at the time of sale of shares, as no IHT on sale transaction. Okay, when you sell anything at that time, there is no IHT. However, on the death of his aunt, at that time the IHT implications can arise, because at that time the PAT will become chargeable. Okay, and it was clearly written here that the debt is within 7 years of the PAT. Okay, we'll be referring to the scenario, but just writing small points which are obvious one. At the time of Jake's aunt, IHT will arise as potentially exempt transfer will get chargeable for death tax, as his aunt will die within 7 years of gift, as it was written here, that is within 7 years of the potentially exempt transfer. Now let's look at the scenario in more detail. Sale of shares in Paul Limited. I'm also considering selling the whole of my shareholding in Paul Limited, consisting of 6,000 ordinary shares. I enclose a schedule setting out additional information in respect of these shares. So let's go and read it. Schedule from Jake, date is 1st January 2024. Details of the possible sale of all of my shares in Paul Limited. This sale would not take place until the tax year 24-25. I would sell the shares for their market value, which I would expect to be £470,000. Paul Limited is an unquoted manufacturing company. I have never been an employee of Paul Limited and will not become one in the future. Acquisition of the shares from my aunt. 1st May 2015, my aunt purchased 6,000 shares in Paul Limited for $295,000. 1st October 21, my aunt gave all of her shares to me. At that time, they had a market value of $420,000. So Jake had received these shares through a gift from aunt. My aunt and I made a joint election for the purpose of gift holdover relief. That's a CGT thing. This resulted in 112,500 of the gain being held over. For the purpose of inheritance tax, I was advised, and you have subsequently confirmed, that the gift qualified for 100% rate of business property relief, because my aunt had owned the shares for more than 2 years. 12% of the Paul Limited assets consisted of accepted assets. On accepted assets, there is no BPR. The rate of BPR is 100%. Like in BPR, there was 100% and 50% situation. But on accepted assets, there is no BPR. So on 12% of the assets, there will be no BPR. So you'll be getting BPR on 88% of the transfer value, 100 minus 12. In the tax year 21-22, my aunt also made a gift of an investment property to my sister. This occurred on 1st September 21, 1 month before our gift, when the property had a market value of 360,000. So we have to explain the IHT implications without any calculation, that what IHT will be arising on the death of his aunt. Okay. At the time of death, at the time of death of Jake's aunt, IHT will arise as Pat will get chargeable for death tax as his aunt will die within 7 years of gift. Now, if Jake will sell shares before death of his aunt, then in that case, BPR, business property relief, will get withdrawn. Okay. See, if you sell the shares before the death of the donor and you don't reinvest it, the business property relief gets withdrawn. In this case, value of transfer after any available annual exemption will get subject to IHT for death tax purpose. Okay. Now we don't know exactly about the disposal date and the death date also, because aunt will not die between now and 31st December 26. We don't know the exact date, and there is no exact date about the disposal date also. Like we'll sell shares in 24-25, so maybe we sell it before the death or after death. We don't know about both of the dates. So if the shares are sold before the death, then the business property relief will get withdrawn and the value of transfer after any available annual exemption will get subject to IHT. However, if shares are sold after death of aunt, like if Jake sells these shares after the death of aunt, then the condition of BPR is satisfied, that we have to keep it in ownership till the death of the donor. If it's disposed before, then BPR gets withdrawn. If it's disposed after the death of aunt, then business property relief will not be withdrawn. Okay. BPR was available on gift of shares of Paul Limited on 88% portion of transfer as 12% of the assets of Paul Limited consisted of accepted assets. In this case, 12% value of transfer less any available annual exemptions will get subject to IHT for death tax purpose. See, let me repeat it again. We were strictly asked that we have to do it without carrying out calculation. So we just have to explain it. There will be no IHT at the time of sale. That's simple one. At the time of Jake's death, IHT will arise. At the time of the death of his aunt, IHT will arise as death tax will arise because aunt is dying within 7 years of gift. Now, if Jake will sell the shares before the death, then the condition of BPR is failed. Like you are not keeping it in ownership till the death of the donor. See, Jake got these shares from his aunt who gifted it to Jake. Now, if the aunt will die, and then the Pat will become chargeable as aunt is dying within 7 years of the gift, and that's clearly written here that death is within 7 years of the potentially exempt transfer. Okay, so you clearly stated it that the death tax will arise if Jake will sell the shares before the death. Now we don't know about the disposal date or the death date, so we're just writing it if. Then the BPR will get withdrawn, in this case value of transfer after any available annual exemptions. Like for annual exemption also we'll develop a comment that they are already used, reason being that there was a gift of 360,000 on 1st September 2021, which is just 1 month before our gift. Okay. However, if shares are sold after the death of aunt, then BPR will not be withdrawn. Okay. In this case, the BPR will remain intact, which was on 88% portion. Okay. 12% of the asset consisted of accepted asset. Now you must be arguing that, sir, it's certain 100%. Yes, the rate of BPR is 100%, like it can be 50 or 100, but it's not available on accepted asset. So 12% are the accepted assets. So BPR will be available on 88% portion only. Okay. Now, annual exemption and nil rate band will not be available against gift of shares to Jake on 1st October 2021, as both of these will be used against gift done by his aunt to Jake's sister on 1st September 2021, which worth, like how much did it worth? It was written here, it worth £360,000, which worth £360,000. So obviously that will use up annual exemption and the nil rate band, everything. Okay, now taper relief will be available for death tax purpose if Jake's aunt will live for at least 3 years after the give date of 1st October 2021. Okay, taper relief will be 20% if Jake's aunt dies after 1st October 2024, because then 3 years will be completed, 22, 23, 24. For every extra year she lives, taper relief will increase by 20% per year. So let me repeat it again. See, I particularly believe that this is not difficult. Okay, like it's something very basic. There will be no IST implication at the time of sale. Straightforward. At the time of death of Jake's aunt, IST will arise as Pat will get chargeable for death tax as his aunt will die within 7 years of gift. If Jake will sell the shares before death of his aunt, then in that case BPR will get withdrawn. In this case, value of transfer after any available annual exemption will get subject to IST for death tax purpose. However, if shares are sold after the death date, we don't know the gift date, we don't know the death date, we don't know the disposal date. It's not written. Like it will be between January 24 and 31st December 26. And here also the shares will be sold in 24-25. We don't know the actual date. So if the disposal is before the death, then BPR gets withdrawn. If it's after the death, then BPR would remain intact. In that case, BPR is on 88%, 12% is chargeable. Annual exemption and nil rate band are already used because a gift is made just before your gift. Okay, like you can look, your gift is October 21, that was made in September 21. Taper relief will be available for every extra year Jake's aunt will survive. Okay, so I particularly believe that this is not difficult. Okay, so if you look at it, we have developed all the possible comments that there is no IST on sale. We talked about disposal before the death, disposal after the death, annual exemption and nil rate band that will be used, and we commented on taper relief. Okay, now you can also write that rate of death tax will be 40%. Now, since the calculations were not required, so you have just done everything in commentary form. Now, let's look at it that what else he's asking. Calculate the chargeable gain resulting from the sale before deduction of any available relief and explain whether or not the following reliefs would be available. Business asset disposal relief and rollover relief. So let's comment on that. So now we are calculating the chargeable gain from the sale. Chargeable gain resulting from sale of Paul Limited shares. Believe me, it's very easy. Now, let's add the table for it. Now, what's the disposal proceed? What's the disposal proceed? Let's look at it. Now, the disposal proceed of these shares is £470,000. I want you all to listen to me carefully. £470,000. Now we have to pick up the cost. Now Jake has never purchased these shares. Now, cost of shares will be equal to market value of shares when Jake received it through gift However, it will be reduced by claim of gift relief made at that time. Okay, let me do the relevant working. I want you all to listen to me carefully. Now, what was the market value at time of gift? Let's look at it. Market value at time of gift, when these shares, my aunt gave all of her shares to me. At that time, they had a market value of 420,000. See, whenever you receive anything through gift, the things are transferred at market value. So that's market value of the shares. And the gift relief at that time was claimed of 112,500. Gift relief claimed at time of gift 112,500. So the base cost will be, I hope you remember all of these things. So it's 307,500. So this is your cost, 307,500. And here comes your chargeable gain, minus 470,000. So that gives you the chargeable gain of 162,500. Like, I particularly believe that I haven't done anything difficult here. Like, it's not difficult. If you think that it's difficult, then you specifically go and revise the rules, because it's just some basic working which I have done. Okay, let me repeat it again. What he asked from me: calculate the chargeable gain resulting from the sale before deduction of any relief. I said, okay. The disposal proceed is 470,000. What's the cost of shares? It will be equal to the market value of shares when we received it from the aunt. So when he received the shares from the aunt, we have to write the market value of that time. Just a second. We have to write the market value of that time. So at the time of gift, the market value is 420,000. See, it's not a transfer between husband and wife that it will be done cost to cost. Okay, it will be done at market value. The gift relief at that time was claimed of 112,500. That gives you the base cost of shares, and here comes your chargeable gain. Okay, now what else he's asking? We have to explain on the reliefs: business asset disposal relief, rollover relief. So let's comment on that. Business asset disposal relief will not be available on sale of Paul Limited shares. Now you know the reason. It was clearly written here that he has not been an employee of Paul Limited. I have never been an employee. Will not be available on Paul Limited shares, as Jake has never been an employee of Paul Limited. Then he asked us about the rollover relief. Okay, about the rollover relief, it's very simple. No rollover relief on disposal of shares, as shares are not a qualifying asset for rollover relief. Now, qualifying assets for rollover relief, I hope you all know, it's land and building, plant and machinery, and goodwill. And explain the relief which would be available in respect of any IHT payable following the death of Jake's aunt. Okay, so whatever IHT we pay, it becomes our cost. Okay, like if the donee is paying any IHT, he can claim the IHT payable as the cost while calculating the chargeable gain. Okay, any IHT payable by Jake on death of Jake's aunt on this gift of shares will be deductible from capital gain tax while calculating gain on disposal, because it's completely logical. If you are paying any IHT, that's your cost, so that cost becomes deductible. So if any IHT is payable, explain the relief which would be available in respect of any IHT payable following the death of Jake's aunt. So if donee is paying any IHT, he can claim a deduction from capital gain tax, like it's the cost which you deducted from your gain on disposal. Okay, any IHT payable by Jake on death of Jake's aunt on this gift of shares will be deductible from capital gain while calculating the gain on disposal. Like you can claim it like a cost here, you can claim it a deductible amount. That's permitted because that's the cost which you are incurring against that purchase. Like you got these shares on gift, so this is the cost which you are incurring in form of tax paid. So if Dhoni pays any tax, that's deductible. So now the question is done. And if you look at it, believe me, it's an easy one. Like it's not difficult, which I would say that a student of advanced taxation can would say that, oh, it was a difficult question. It's not like that. We just made the format for the memorandum for client files. The simple format, you need to remember it. And then the requirement relating to ethics. Why is it important to contact the previous tax advisor and what further actions which we should be taking? Then insurance proceed, the situation of destruction of asset, we looked at it, how the reinvestment situation is dealt. In the case of destruction of asset, we discussed that. I told you that you have to use these summary notes, and that's very much helpful. Okay, we looked at that. Then we looked at the deductions in relation to the expenditures which he has incurred. One was the normal trading expense, and other was purchase of asset. So capital allowance and structure building allowance things were relevant. Then VAT part, that was also easy one for a student who has a good understanding of value-added tax rules. And disposal of shares, IHT implications, believe me, it was very easy, and the CGT implications. So if you look at this entire answer, I particularly believe that it's very easy. See, if I sum up my today's class, this is just the first class of all those past paper revision sessions. Like these will be around 10 sessions in which we'll be discussing the past papers of last 5 attempts, and then I'll be giving you 3 mock exams to attempt it on your own and send me for marking and feedback. This has a very important role in passing of your examination. As I told you at the start, that what students do is that they study a particular topic, they do the past paper relating to that particular topic only. Doing those past papers are very easy because that topic is fresh in your mind. But now when you go for actual examination, when all of the topics come together, and that's a problem. Everything starts to get mixed up. So, doing these complete past papers, these revision sessions will add a great value to your preparation. And I would say that these 5 attempt complete past paper revision sessions must be watched along with me only. And then you have to do the papers on your own. And in the last month of the examination, please don't spend time on doing topical practice. It's better to do the complete past paper practice. Okay, these summary notes are available for your revision. If anyone want to contact me, this is my direct WhatsApp number. You can contact me anytime for any query, like any help you want any answers or summary notes. I'm uploading it on the learning management system for my students. Those students who are not studying from me, if they need any assistance, they can always contact me. See, these past paper revision sessions and mock exam are very important to pass your examination. Now, in the next class, we'll be moving towards question 2 and then towards question number 3, and so on. We'll be moving and we'll be trying to complete these 5 attempt papers. Okay, I hope that things are clear. If you have any query, feel free to contact me on my WhatsApp number. Thank you, everyone.